Good evening, dear colleagues. As always, tradition holds. In the evening, Dan Strelkov from the ForexTimes project, and I invite you to join the ForexTimes community. Here you will find unique forecasts based on data from the Chicago Mercantile Exchange. Trust the data from professionals, trade signals, and consultations at any time of the day. Let's begin, as always, with the Euro, Gold, and the SP 500 index. We'll start with the Euro in a global sense. To this day, we are likely forming a triangle. We know that not only is this a corrective structure, but the triangle is also the penultimate wave in the wave theory of Ralph Elliott. Therefore, we assume that we will see a strong increase. Dear colleagues, if I'm right and we see a strong increase, please do not close your long position. Instead, only add and add positions for buying. For the simple reason that if I'm right, the increase will be approximately half a point upwards. Next, let's see what situation we have for the upcoming trading week according to the data from the Commodity Futures Trading Commission. We see a decrease in the number of buyers by 58%. Interesting is the decrease in capitalization of the trading instrument is less than 1%. This indicates that buyers have withdrawn from the market, but they have not taken their money. However, this data should be approached with caution. Let's determine the likely structure. Namely, the structure is likely to be such that at the moment we are in a correction wave. If I'm right with the triangle, then in a triangle, the price movement moves in the form of zigzags. This is a corrective structure, and now I'll show you that this entire corrective structure is a flat. A flat, what do we have? Zigzag move 1, 2, 3. Zigzag 2, 3. Often with an update of the maximum value and impulse 1, 2, 3, 4, 5. Zigzag, zigzag impulse. This figure is called a flat. So, dear colleagues, zigzag. Then the zigzag in the form of a flat. Again, a flat. Please take a look. The 3-3-5 pattern is realized as an expanding ending diagonal triangle. And now the most important part here should be an impulse. Let's see. 1, 2, 3, 4, 5 wave. Correction wave 2 again. 1, 2, 3, 4, 5, wave 3, followed by a correction wave 4. Now the question remains, has the fifth wave ended here, or will there still be an extension on the fifth wave? How should we proceed in the upcoming trading week? It's all relatively straightforward. I will now slightly increase it like this well, it wouldn't look good this way. Let's delve into it. The first scenario. If in the upcoming trading week we see a more beautiful 5-wave structure where the structure appears as an initial triangle, then we will see a correction and decide on market entry. But in the case of a diagonal triangle, it is best to have a deferred buy order. If the price moves down on Monday or Tuesday in the first half of Wednesday for a minimum knowledge update, then we follow the plan. Impulse, correction, and market entry with a deferred buy order. This is the plan for the euro for the upcoming trading week. If everything I have just described does not happen, we remain calm and do not take any action. We simply let it pass by. Otherwise, everything will just collapse. Let it fly, we won't catch it. Something like negative macroeconomic data in Europe or very positive data in America could cause the euro to plummet. We will observe how events unfold further. Gold, dear colleagues, here in essence is the same. I hope that at the moment in gold, wave C is still forming and therefore the triangle pattern is still relevant, as a triangle is a corrective structure after which price action moves in the trend direction. And in terms of the trend, we are moving upwards. Therefore, we are looking at buying opportunities in gold. How are we going to consider them? Again, let's drop down a bit to the 1 hour time frame and see a 5-wave move here. This is nothing more than an impulse wave movement. Thus, we await with you a correction, ideally in the 50% to 61.8% Fibonacci range. We stretch the Fibonacci grid from the end of wave 5 and then decide on market entry from the 50% to 61.8% Fibonacci range, or with a deferred buy order above the base of the wave, setting a stop loss above the base of the wave. If you are working with deferred orders above the base of the wave, then if you enter the market from the 50% to 61.8% Fibonacci range, set your stop loss below the base of the wave. In this way, we try to buy this trading instrument, namely gold. However, if something happens and gold plummets downward, as the NBA pattern has formed here on the daily time frames, NBA patterns are quite a strong selling pattern. It is possible that gold may drop down, and if the minimum of the C wave of the triangle is broken, namely waves A, B, C, D, then we will have to reconsider our midterm structure, as there is a high probability that an initial diagonal triangle is forming in the corrective decline. This means that most likely there will be wave A, followed by a correction wave B. As the initial diagonal triangle in the correction acts as an impulse, the first impulse wave of the new cycle. Therefore, there will be an impulse within the wave and the price may plummet quite significantly. So, dear colleagues, the most important thing always is to kindly practice prudent capital management and enter the market solely based on patterns. I use NBA and price engulfment, but price engulfment is practically the same as having an impulse. So where our impulse was just a moment ago, let's switch to the impulse as we were discussing. So even if you enter from the 50% to 61.8% Fibonacci range and the price plummets, don't worry. You should have a stop loss set, which should be around 1% to 3% of your trading account balance. Not half, not all, but between 1 to 3%. Now, onto the S&P 500 index, dear colleagues. I still assert that with this trading instrument, it is necessary to work on all selling patterns. At the moment, two levels slightly above 5,500 have emerged. As I mentioned, when the price reached the level of 5,500, it paused. The reason for this pause was due to the hedge options at this level, according to data from the Chicago Mercantile Exchange. This is a significant level and acts as resistance. This is the maximum open interest level for option contracts that professionals from the Chicago Mercantile Exchange use for their futures contracts for selling. Therefore, when the price reached this level and began testing the premium levels, which are crucial, this is where futures contracts for selling with maximum volumes are likely to open. The price was halted, and I believe it may even drop slightly. However, it is not excluded that we may see the price reach levels of 5,600 and 5,700. Beyond these levels, I do not see any further price increase. Moreover, please pay attention to how professionals in Chicago have completely removed their orders, amounting to slightly over $1 billion, which they had previously left. And the most interesting part, please observe the expectations of professionals regarding monthly option contracts, namely the maximum open interest. This is how professional sentiments change. The price seems to rise, but as soon as it even slightly pauses, the professionals immediately lower their price expectations. This can occur quite far, especially with weekly option contracts. It's almost comical. Now, let me tell you, they only reached up to 4560 level for option contracts worth $6.384 billion. Before that, there were option contracts worth $3.665 million. If I start calculating all these option contracts that professionals leave down here, it will amount to more than $150 billion. Dear colleagues, not $150 and not 150 billion of something, but 150 billion American dollars. With that amount, you could buy several countries if desired. This is the expectation of professionals from Chicago. Based on my experience, I can say that if you trust the expectations of professionals, then the mathematical expectation of your trading will constantly be in the positive. Where to get all this data? Of course, it is available on the Chicago Mercantile Exchange, but why bother reading and calculating all the data yourself when it's already done for you by ForexTimes? I have identified all the strongest target levels, and until the price reaches these levels, we simply sit back, smile, and watch. When the price enters these strongest levels of support and resistance based on data from the Chicago Mercantile Exchange, which I publish for you every morning on ForexTimes, then you can make decisions. So friends, please come to the ForexTimes community. You won't regret it, I assure you. Thank you so much, friends. Have a great evening and goodbye.